welcome Prakash Diwan, our first guest on the show. Prakash, hi, good morning. What's your sense looking at the data right now, and what's your call on the market? Would you advise profit booking, or would you advise someone to go out, be brave, and buy stocks?
Well, hi Anuj. I know the market condition is probably quite precarious, unpredictable, and exciting. Absolutely. What we've been very clearly looking at has been profit booking at these higher levels, particularly for the stocks that have had some very significant run-ups, and then that too in a very short span of time, much ahead of what the earnings would calibrate to. And if you have the money, if you're sitting on some profits, then there's absolutely no reason why you shouldn't be brave enough and go ahead and buy out, or go long on some of the other stocks that are in the waiting. But my sense is, as we kind of look at the volatilities, particularly the HV-IV differential that exists, we are very clearly looking at some intraday swings which could be very severe and could upset some of the trading positions. The nervousness is because of that, because the kind of numbers really being in a very different zone that we are not used to seeing. Some of them are contradictory of sorts, particularly volatility and the Nifty both rising at such high levels. But we believe that 13th May should be the day where you could probably, take a lot of profits off the table if things go well. And if things don't look very positive, you could probably, start shorting the market. But it's just another couple of days that you would want the next trade to be kind of panned out. So right now it's profit booking, sit on the cash, wait for the cash to be deployed post 13, but not post 16. It's 13 that's much more critical.
So how would you play the 13th to the 16th time, Prakash? Because that is when I would assume volatility increases. So at that point of time, how would you position your portfolio?
Yeah, so it's very clear. One mechanism that seems to be very promising at this point in time also, and I believe would continue getting intense, is writing calls and puts, both depending on the direction that emerges post the exit polls. Because the kind of premium that some of the options are offering today is disproportionately rewarding. It's extremely high, and then I think it's thanks to the kind of nervousness that exists in the market. You need to leverage that, and that makes the risk trade-off very favorable. So if the outcome of the exit polls gives you a direction that things are falling in place for the NDA, very clearly you need to have long positions to start writing enough puts, as many puts as you want to. But if you feel that that's not something that's emerging as very clear and the number is closer to 210, 220, I would believe the market would correct itself significantly from there. So then it's time to write calls. So one of the options you need to write, and that's going to be very clearly the direction that the exit polls indicate.
That's interesting, Prakash. Let's talk about stocks then, because at the end of the day, it's you take positions by a stock. So what set of stocks would you like to buy ahead of the event?
Yeah, so and it's very clearly, if you see the last few days, we've seen very clearly since the series started, except for yesterday's minor reversal of trend where we were losing out on some points on the Nifty every day, not something very significant. We've seen a rotation of leadership, right from ranging from the FMCG to the oil and gas to the banking pack. My belief is that the market will continue to look for those kind of sector rotations on an intraday basis or till the event is closer. And I would believe cap goods and infrastructure would be the best bet that you would want to go long on, and driven by a little bit of consumption, particularly on the auto side. I'm quite bullish on autos doing well post 13th, once the direction of the market gets much more clearer for people. So look at some of the larger auto companies; they'll benefit. Look at some of the consumption themes therein, and of course cap goods and infrastructure to top it up.
Prakash, just wanted your call on metal names, because they've been so volatile. One day top gainers, one day top losers. How would you approach that space?
I think very clearly that's been a fairly high beta kind of a play. We've kind of waited a bit too long for the revival in the global economy to kind of give some sort of an indication for the commodity pack as a whole. But my sense is, if you look at value out there, maybe Tata Steel is something that clearly stands out at every dip. This is a stock that you could accumulate buying into. But if you stay away from the Sesa Sterlite, which is much more news flow driven, or from the Hindalco, which are predicated on a recovery which is elsewhere and which is difficult to kind of correlate very easily, it's best to kind of be with the ferrous side and particularly Tata Steel therein, because any kind of a restructuring on the debt will also kind of have a tremendous impact in addition to the firming up of European steel prices. So I think it's a good buy. People need to be patient with these kind of purchases of stocks at lower levels, and it's an accumulation phase that you need to look at, and not a very clear immediate tactical punt of sorts that will give you money very quickly.
Okay, Prakash, did you look at the results of United Bank of India, and would you have a call on that stock?
No, I mean, I don't know whether they're as true as they're impressive enough. But the sense is that, these numbers make it much more difficult to anticipate any kind of a growth going forward. So if you were to read between the lines in the management commentary, very clearly they seem to have overdone something last quarter, and hence kind of this quarter makes it look much better optically. But is the real situation on the ground that good? I have my doubts. So my call is to stay away from a bank like that, whether you have a BOB and a Canara Bank and a Altamount Bank available at much better valuations in terms of the quality that they offer.
Prakash, two mid caps, and if you'll buy them at current levels, Atul, which has been re-rated. I don't know if you're tracking that, but really, I mean, old generation stock up 8% today, and the other is Just Dial, complete opposite to Atul in terms of being as new generation as it can be. But any of these two stocks that you would want to buy?
No, I think Just Dial is distinctly, it's been a great short candidate ever since it was introduced to the FNO world. And it seems almost, as if it was kind of waiting to be introduced. And that similar situation happened to L&T Finance Holding also, which was the other compatriot for this edition. But if you look at Atul, it's wonderful as a story in the making. In fact, that entire segment, Tanuj, is getting re-rated and rediscovered. So you have the likes of Avinati Organics, Omkar Speciality, a lot of these companies that will start kind of, coming closer to those kind of re-rating candidature. But Atul per se on a standalone basis definitely is a very great stock, and I would definitely buy it even if it's moved up significantly and gradually over the last many months.
Prakash, Titan comes out with numbers today. Would you be a buyer into Titan?
I think Titan should make a benefit, but it's almost like a flat earnings revision that you could probably anticipate this time around, maybe even under 4% on the top line, and the margins also probably will not be very impressive. But I would expect Titan to lose some ground and then get kind of sideways after the numbers. And once that happens, maybe it would worth looking at again at lower valuations. But at this point in time, I really don't see a great upside in a Titan just because of the kind of numbers involved in it.
Okay, fair enough, Prakash. Thanks very much for joining in. So that is some fundamental opinion which is coming in from Prakash Diwan of Altamount.